Hi, it's Paddy Hirsch at Marketplace. So if you want to buy a fish, right, you go to a fish market. If you want to buy shares in a public company, you go to a stock exchange. And if you go to a public exchange like the NASDAQ or the New York Stock Exchange, everything that goes on in there it's public and you can see what's going on. It's kind of like at a fish market where all the prices are advertised and you know who's selling what. But in a private exchange, which is also called a dark pool, you have no idea what's happening because everything that goes on in there is secret. All right? It's kind of like going to the fish market and trying to buy tuna down in the basement with all the lights off. All right? You've got no idea who's selling what, how much they're selling it for, but because there's no lights on down there, then they don't know who you are or how much you're willing to pay. And the way it works is, as a buyer, you just keep bidding and bidding on the fish that you want until somebody matches your price. And nobody knows in the market how much you're paying for fish until you walk out of the basement and into the light. It's exactly the same with stocks in these dark pools. And investors use these dark pools because sometimes they want to buy or sell big blocks of stock without anybody knowing and without moving the market. And that's kind of fair enough, right? Because if people knew what they were up to, then maybe they might try and rip them off. So they want to keep it secret. And that's all right. The problem, though, is that these dark pools, they're not transparent. I mean, they're dark. They're very opaque. And regulators worry that bad actors might get involved here and find ways to rip the consumer off or rip these investors off. And it's a fair worry because 13%, okay, of all stock trading now goes on in these dark pools. So if there is something dodgy going on in these dark pools, well, it could end up leaving us very badly needing a drink.